Hello everyone, today is Tuesday, August 18th, 2020. My name is Evan and welcome back to another midweek market recap video. We're going to jump right into our market technicals dashboard. Take a look at this day's performance. You can see stocks were mixed on the session. The Dow and the IWM were both down. The S&P and the Qs both up. And it was basically an exact mirror of performance. The Dow was down 0.25%, SPY was up 0.25%, Russell was down 1%, and the Qs were up 1%. If we take a look at the 5-day change numbers, this is interesting, and the script is totally flipped here because the Qs are now back clearly in the lead here, up 5% over the past 5 trading sessions. And if you recall, the prior 2 weeks, we saw the exact inverse. We saw the Qs were selling off. We saw the articles and the worry that tech was, basically done for. The big pullback was coming, and the Dow stocks and energy and financials all seem to be getting that rotation over the past couple of weeks. And now here we are with that script kind of flipping back on its head. We are back to our old sort of recovery positioning where the technology and Nasdaq stocks are fueling this rally. The Qs closed back up at all-time highs, and they have seen some pretty good performance here over the past week of trading. Now, this Dow and the SPY are still up over the past 5 days, so that's constructive. It's just the Russell now that has gone negative here over the past 5 trading sessions. But if we look at the major indices versus these key simple moving averages, we are above the 10, the 50, and the 200-day right across the board. Now, if we scroll down and take a look at sectors, we have technology and consumer discretionary and communication services at the top of the list. Those are the 3 outperformers here on a 5-day basis. On the downside, financials, energy, and industrials. They are red over the past 5 trading sessions, and these are sectors that had been working pretty strongly over basically the start or the first half of August. So you're seeing a little bit of rotation and some pullback in those sectors. Now, in terms of major markets, we have natural gas and silver and gold, so basically commodity heavy. If you look at the 4th spot, it's USO, which is oil, dominating the 5-day relative outperformance. And on the downside, we have volatility, we see TLT, and we see LQD. So we're seeing fear, or VIX is the biggest unwind there, followed by bonds and investment grade credit. So let's jump into the charts. Let's take a look at these recent trends here and see if we can make some sense of the action. We've got TC 2000 open. We've got our equity market grid loaded up, and we have our smart trend filters applied here. It's a very simple price and volume color-coded trend model, and price itself is the white dashed lines on these charts. So if we start with the top left, the S&P 500, this is a weekly picture. There's been absolutely no change in outlook here. We've basically had a buy signal on the S&P 500 since May. That continues to be the case today. Price is above our trend filter. Trend filter's printing green bullish outlook here. So we effectively want to be remaining long of the S&P 500, and dips are kind of seen as opportunities rather than worries. If we look at the top right, the Nasdaq here, so despite even the past couple of weeks where things started to get a little more gloomy or sideways or uncertain, there was certainly no change here on the weekly picture. Still have that bullish outlook, and everything's pretty much the same. Same with the Russell in the bottom left, same with the ACWX in the bottom right. If we go down to a daily chart and assess our filters, our trend filters, you can see we still have bullish trends, bullish outlooks here across all of the major indices. Again, if we bring our attention to the top right, the Nasdaq, we had that little bit of uncertainty here last week, and then a few weeks ago in here that ended up holding as support, or buyers stepped in, supported the Nasdaq, and we are off to the races once again to the upside. If we were to look at all of them, it would be the Russell 2000 here in the bottom left, and even though we did note the relative underperformance here for the Russell 2000, it is still holding a bullish trend on the daily chart. So this still seems constructive. This still seems like perhaps an opportunity for the Russell rather than anything more concerning, at least at this time, right? So as information changes, so will our outlook here. But at this time right now, everything looks pretty constructive here for the major indices. So let's jump into the price action. Let's look a little bit closer at what's going on here. The S&P 500, ring the bells, because I believe this was, if I'm not mistaken, a new all-time closing high today. Actually, maybe it backed off at the last minute. The only downside here is I don't have the latest. I don't think this will be the latest print. We certainly were at all-time highs intraday. I believe we closed above them, but maybe I'm wrong on that. We're certainly really close. And if we look here at the picture of the S&P 500, you can see we've effectively been trending higher here. Things got a little bit slow over the past 4 or 5 trading sessions. So you can see went more sideways, more gradual and choppy sort of behavior. And this is what brings the anxiety out, I think, for traders looking for, the rollover or the failure at prior highs. And this certainly can still be the case, right? We can totally fail here. Maybe, tomorrow we see some big sell-off and that marks the top for some time. But until and if that happens, the harder trade, I think, right now is just staying the course. It's just relying on the trend and sitting tight through these uptrends, and it's very hard, and market does a great job at sort of convincing us that things are about to end, things are about to roll over, but we still don't have that occurring, at least again at this time, and I'm fully aware that this video could mark the top, and it all starts to unravel from here. But I'm willing to adapt and adjust as new information comes out. And so until that happens, the S&P 500 still on a buy signal here. It's a little extended to the upside, and mostly in the sense that we just haven't seen a good price correction. But the thing that this market is doing is it's just grinding sideways here, right? So even though we haven't had a price correction, you could argue that 5 days trading in the same exact levels is its own way of sort of consolidating and, working through this overhead supply and changing hands and getting that accumulation. So we're not getting the steep pullbacks in price. We're getting a more subdued, lower vol, kind of choppy grind sideways, and then kind of ratchet higher. That's been kind of the outlook here for the S&P 500, or the way this market's been behaving in the latter parts of this recovery. So when we think about levels here, the prior all-time highs, which again came in right around 33.86. So that means that actually, yes, we did close at all-time highs, because this here, my hesitation was this level here at the 33.93. Those were the prior all-time highs, but the closing, this should have been a new closing high today, because I believe the past closing high was 33.86. So we are looking like we closed at 33.90. So it does look like we got new daily closing all-time high, or closing highs in the S&P 500. So that's what I'd be paying attention to right now. We're basically just getting there. We're at this level, so we're still in the realm of sort of noise. So to break through this level and to convincingly have no overhead supply, that's what we basically want to see. The downside, the bearish scenario, what you'd be on the lookout for is if we did see some type of steep rejection here, a break below the prior day's lows, high volume to the downside, expansion in range lower. Those are all signals, clues that things are changing. And if you are looking for that, that's what I'd keep an eye out for, those kind of conditions. Until that happens, the trend there still remains higher. If we go to the Russell 2000, you can see here, as we talked about, this has been now kind of in consolidation mode. It got as high as right around 159, which we talked about. This was a level that was very important way back in 2019. This was a level where price found resistance at, and then it chopped around a lot towards the end of the year. So this is a very old sort of, important prior reference point for the market. We went right up into it, we've stalled out, and we've gone sideways. Once again, the consolidation here looks pretty darn healthy. We have an uptrend that, we're in the context of an uptrend, and we are basically moving sideways through time rather than a steep pullback in price. And these can often be the harder things for traders to sort of sit through and deal with, because at least when price is heading lower, you've got some direction and you can plan some more better pullback type of entries. Here we're just kind of moving sideways, but we're consolidating under this pretty important level here. So I would say that this looks pretty actionable for an opportunity. If we can start to get some new momentum and breakouts over 159, let's call it, somewhere in these cluster of highs, that's where the Russell could start to break out, outperform a little bit, and help kind of continue this market to the upside. If we look at the Nasdaq 100, we can see here that we had a couple of periods of worry. It was mainly right in here. We had our first 3 days down in a row for the first time in this recovery off of the March lows. We met that up with an aggressive, kind of pop to the upside last Wednesday, and then price has basically been kind of working itself higher again. And don't forget, the Qs here basically did go sideways throughout all of July. So this was the heavy earnings season right in, referring to this consolidation right in here. So price basically went nowhere for a month. Then it tried to break out, it pulled back into it, and now it's just getting going again. So the Qs, even though yes, in the short term we're certainly extended again, and this trend is certainly long in the tooth, it is behaving very well technically, and in fact it is really just kind of getting going back over the July highs at this time. So that really is the market outlook there. Uptrends basically all around. The harder trade right now seems to be to stick to the long side, and that will eventually change. It's just uniquely difficult to call tops ahead of time. So try not to fight too hard out there, or, stick with your risk management sort of principles. If we go down to some of the other markets here, we'll skip credit on the top. We go to the bottom left here is volatility, still on a sell signal on the weekly. Bottom right's TLT. Remember, this went neutral last week. It is rebounding this week. So if we go down to a daily chart now, you can see volatility still in a sell signal on the daily. TLT is a sell signal here on the daily as well, but it is rebounding back up to this trend filter here. So for me, I still tend to favor, when I think about these cross currents here, I think TLT just essentially presents an opportunity right now for increased ranges and volatility, but I still tend to like to defer to the longer term time frame, which to me is still bullish at this time. So the short term is certainly suspect here as we've entered a downtrend on the daily. The weekly chart, though, the bigger picture is still holding up. So my conviction on any type of near-term shorts would be just very short-term in nature, kind of deferring to that longer-term trend. That's certainly at least the way I like to frame it out. If we go to commodities next, we look at gold here and silver, both extremely kind of in this extreme trend here, bullish trend on the weekly chart. And take a look at the bottom left here, USO. So USO printing its first bullish transition up here since the beginning of the year, since really 2019, just about. It was the first week of January where we had our uptrend ending in USO. This is now after a 70% decline in USO, it's finally starting to turn back up here. So I think that's interesting, that's notable. Again, the daily chart for USO has been up for several months now in this commodity. If we go to sectors here, I do want to just point out on the weekly chart, we nearly have a unanimous uptrend across the board, and this helps speak to breadth as well. We're looking at basically 12 different sectors here. We're sort of cheating a little bit with, I guess IBB. But essentially, we've got the spider ETFs over here. We've got our trend filters overlaid on a weekly picture, and we're almost in uptrends right across the board. It's just biotech, which is in currently printing a neutral sort of yellow phase transition right now. And, you know, to be honest, the prior trend is bullish. So this still, to me, is, you know, kind of a trend that looks pretty good here. But I think now that energy has turned up, financials have turned up, we finally got some of these laggards that turned up, we're basically getting these longer term trends that have now expanded to, you know, the whole breadth of the market. So I do think that's pretty interesting. Let's finish off today's video looking at some individual sectors. The first is XLF. XLF here on the daily chart, right? So if I were to switch over to our daily transition, you can see here, this is now moving from bullish on the daily to a yellow kind of transition signal. So financials under a little pressure here, kind of testing their trend right now. So let's pay attention to that. They can still certainly come in and defend this after, you know, 4 out of the last 5 days down. But this would be a good spot for buyers to arrive. We'll see if that happens in financials. Biotech, like we sort of mentioned here, starting to turn back up on the daily chart. So our daily trend filter, we've been in a sell signal for biotech and for a couple of weeks. It's starting to turn back up now, kind of the inverse of financial. So we'll see if this can, you know, continue to pick itself up and start to hold at this time. So that's it. That is kind of the midweek update, all the things that I think are pretty important. Essentially getting new all-time closing highs there in the S&P 500. The Nasdaq's back at it, and we're still seeing continued uptrends all around in these markets. I think that's the big story from this week. So hopefully you guys are doing well out there. Thanks so much, as always, for tuning in. Every Tuesday we do our midweek video. Friday's the long form market recap, market analysis. And tomorrow we'll be back with some trade ideas during the market session, so don't miss it. Thanks for tuning in, and don't forget to subscribe if you want to stay up to date with all of these videos. Have a great rest of the day.